Thanks for joining us today for Jennifer Strauss and Associates and our Webinar Wednesday program coming to you in Washington, D.C. We are uncovering each part of the DFARS, or Defense Federal Acquisition Regulation Supplement, every Wednesday at 12 p.m. Eastern. And as you know, the DFARS are the rulebooks for contracting with the Defense Department. And we've been moving sequentially this year. So we started with DFARS Part 201 in January, and we'll be finishing with Part 253 in December. Our webinars are every Wednesday and are provided complimentary. They are recorded and can be downloaded from our website and YouTube channel, which now holds over 450 of our government contracting webinars. In the interest of time, we do not take questions. If you do have questions for our speaker, we will have his information on the last presentation today. Virginia PTAC at GMU offers free one-on-one counseling to firms in Virginia on federal, state, and local procurement topics. Online resources and group trainings are free with no restriction on business location. And if you're interested in learning more, please use the links provided to explore what PTACs can offer. Set Aside Alert provides up-to-date news, information, and opportunities for small business federal contractors. Their daily opportunities alerts assure you won't miss important source sought and solicitation announcements, providing details so you can jump on the hot ones. Every 2 weeks, they deliver concise breaking news, events, regulations, and teaming opportunities. Please join the Wrestling Chamber of Commerce Government Contractors Council for regular meetings. You can contact Alicia Fields with the email shown on your screen if you do have any more questions. Federal Contracting Relationship Game. Now get in front of your federal humans sooner with the exclusive Players and Layers method from Judy Bratt and Summit Insight. You can connect with her on LinkedIn and find out more, or you can visit growfedbiz.com today. And if you're interested in selling to the federal government, you may need a contract vehicle. The most popular one is the GSA schedule. Learn more about the requirements, the proposal process, and how this contract vehicle may or may not be the right tool for you. Jennifer Strauss has been teaching a series of classes, and the last class is listed here on the screen right now. Additionally, all the classes are listed on our website under the event section with each registration link. Okay, now a little bit about us. We work with U.S. federal government contractors, including service and software firms. Our services range from market analysis reports to contract vehicles and compliance, and more information can be found on our website. We also have opportunities for your organization to advertise in our newsletter. We now reach over 23,000 subscribers, and this includes both contractors and government. Contact us with the pricing information shown on the screen, and you can email hello@jenniferstrauss.com for more information. I also wanted to inform you of a new series that we're holding this year. We have a monthly series called the GovCon Live Q&A Cafe. This is a live webinar series held each month, and these will take place on the second Friday of each month this year in 2021 at 12 p.m. Eastern. We have assembled a group of 4 panelists who are subject matter experts on a specific federal contracting topic. So the panelists will make a short presentation about the topics listed here on your screen, and then they'll take your live questions about that topic. So, for example, our panelists covered sales and capture last month, and this Friday on July 9th, our panelists will be covering proposal writing. Our panelists include attorneys, consultants, and other industry professionals, and you can sign up on our website under the Q&A Cafe tab. Sponsorships are available, and you can email hello@jenniferstrauss.com for a media kit with pricing details. Also, please note that you can use code DFARS for a $15 discount on each of these webinars. Okay, and now to introduce our speaker. Alejandro Laboy. Welcome, Alejandro. We are glad to have you here with us today, and I'll now turn it over to you.
Thank you very much. My name is Alejandro Laboy, and I'm a manager with the BDO accounting firm. I'm part of the Industry Specialty Services Group, which is one of the biggest practices in the GovCon space. We tackle every single element surrounding government contracting and grants. We have assembled a group of experts ranging from ex-DoD officials and industry experts that have been an area of services that can provide an area of services that help navigate companies through the government compliance arena. We know it's a highly volatile environment. There's continued change throughout the industry, and we pride ourselves at having the best group of experts to tackle any issues that you might encounter with your government customers. Just to give you some background about myself, I started off with the Defense Contract Audit Agency, commonly known as DCAA. I spent a couple of years, and once I became a supervisory auditor, I moved to the consulting side. I also participated in the Department of Energy's contract, where they audit basically inter-cut submissions, forward pricing rate agreements, proposals submitted by DOE contractors. And then the last years, I'll be focusing on providing consulting/advisory services to the government community to help companies, like I said, navigate the intricacies of dealing with the government contracts. Next slide. So today we're going to go over DFARS Part 229, titled Taxes. We are going to try to give you a brief overview of the guidance provided by the Department of Defense and key items that you need to be aware of. Next slide. So for the topics that we're going to be going over we're going to explain key terms that everyone should be aware of, and that is going to help everyone to understand the different elements within the DFARS Part 229. Then we're going to go take a deeper dive on the DFARS. What is the policy that the Department of Defense is following? How do you resolve tax problems, especially with foreign concerns or foreign countries or contracts that are going to be performed in foreign countries? How do you report foreign taxes for U.S. assistance programs? Different contract clauses the companies need to be aware of, that they need to be incorporated into your subcontracts or agreements with third parties. And then we're going to give you some useful links that will help you to identify different agencies and websites that provide really key information for you to be compliant with the DoD's policy. Next slide. So starting off, I always like to start to define what is the DFARS, which is the Defense Federal Acquisition Regulations Supplement. It is a supplement to the Federal Acquisition Regulations, the FAR, and is administered by the Department of Defense. It contains the requirements of law, DoD-wide policies, the delegations of FAR authorities. Key thing here, the deviations from FAR requirements and policies and procedures that have a significant effect on the public. As a rule, always think of the DFARS as it implements the FAR, but also supplements the FAR in some ways, and there are certain class deviations that are included in the DFARS that companies should be aware of. As a rule of thumb, the DFARS should be read in conjunction with the primary set of rules in the FAR. So it's a complementary supplement to the FAR, and that is administered by the Department of Defense. Moving on is the DFARS Procedures, Guidance, and Information, commonly known as DFARS PGI. It provides a universal set of policies and procedures for the Department of Defense. It was developed as a companion source to the DFARS, so you really should be reading the DFARS to understand the policy and the different elements within that policy, but also to try to review the DFARS PDI, which is a more concrete set of steps and guidance that the DoD has provided to the community to aid with the understanding of the different elements of their policy. Next slide. Commodities. This is a term that is included in DFARS 229, which means any materials, articles, supplies, goods, or equipment that are being procured on the federal DoD contracts. Tax treaties. As you know, there's a lot of taxes that are paid to foreign concerns or foreign countries, but the U.S. government has a lot of treaties with different countries that serve to release certain tax imposition of taxes to any commodities procured under government contracts. The definition is treaty is a bilateral agreement made by two countries to resolve issues involving double taxation of passive and active income of each of the respective citizens. One of the most important objectives of a treaty is to set a bilateral agreement related to tax and tax treatment to avoid or eliminate double taxation. The U.S. government is eligible for relief from several taxes and duties as a result of various treaties and agreements with foreign governments. The U.S. Department of State and the U.S. Treasury Department have oversight over those treaties, and they provide the list of treaties that are in place right now. I always suggest companies to go to those websites to be able to learn the different treaties that are in place. There's a massive amount of treaties out there, and sometimes it's quite cumbersome to identify what treaty applies to the country you're doing business with. So I will say that those are the major components of the library of treaties that you can find with foreign countries. Next slide. Foreign concerns is a pretty important term. It means any concern other than a domestic concerns, which is not pretty explicit. So I went to another DFARS, which is the 225003, to find out what is a domestic concern. And a domestic concern, it means a concern incorporated in the United States, including a subsidiary that is incorporated in the U.S., even if the parent corporation is a foreign concern, or any unincorporated concern having its principal place of business in the U.S., which means that if your entity or the country that you're doing business with, it doesn't fit the domestic concern definition, then it will fall under foreign concerns for the most part. What is a qualifying country? It means a country with a reciprocal defense procurement memorandum with an understanding or international agreement with the government of the United States, in which both countries agree to remove barriers to purchases of supplies produced in the other country or services performed by sources of the country, and the memorandum or agreement complies, where applicable, with the requirements of the Section 36 of the Arms Exports Act. So essentially, a qualified country is a country that has an international agreement with the U.S. government, and the goal, like I said before, one of the primary objectives is to relieve some of the burdens that come with paying taxes in other countries. And one of the key goals as well is to stimulate the movement of products, commodities between countries, and alleviate some of the burdens that are coming with those type of transactions. In the DFARS, there is a list of the qualifying countries. In the DFARS 225, you can find the list of countries there. I gave you some examples: Australia, several countries within the European Union, Turkey, and the United Kingdom have treaties with the U.S. government, and every company doing businesses in those countries or have contracts in those countries should be aware of those treaties. Next slide. taxes. So the DFARS 229 is related to taxes and the treatment of those taxes and the search for a relief of those taxes with foreign countries. The definition of taxes is coming from the DOD policy, which is all direct or indirect foreign custom duties, import and export taxes, excises, fees, and other charges imposed at the national, local, or intermediate level of a foreign country other than and other charges for services requested and received, regardless of how a charge is denominated in foreign law or regulation. Some of the common taxes that you will see and that may be subject to your contracts are the purchase tax, the sales tax, which is one of the most common taxes that emanate from doing transactions with foreign concerns or foreign countries, the use tax, gross receipts tax, trade tax, business tax, value-added tax, which is an important tax to be aware of when you're dealing with the United Kingdom, and real and personal property taxes. This is not an exhaustive list of all the taxes that the companies should be aware of. It's just the most common that I've seen in the industry. Next slide. All right, so what's the policy set by DFARS Part 229? Essentially, it's a bylaw. Bilateral agreements with foreign government must include a provision that commodities acquired on the contracts funded by the U.S. assistance programs should be exempt from taxation by the foreign government. Hence, it's very important for companies to be aware of any bilateral agreement between the U.S. and a foreign concern or a foreign country to make sure that you can alleviate any tax burdens imposed by that country on any commodities that are procured within that country. If taxes or customs duties nevertheless are imposed, the foreign government must reimburse the amount of such taxes to the U.S. government. Later on, we're going to show you how companies and ACOs or any government officials need to be reporting those taxes that are being imposed by foreign countries and how those issues or any issues that come from that transaction need to be scaled up within the agency or the Department of Defense. The foreign tax exemption, it applies to a contract or a subcontract for commodities when funds are used or appropriated by the annual Foreign Operations Appropriations Act. This is an act that is renewed every single year by the House Committee. I will say that the last version of the budget reflects the 2022 House Committee approved appropriations for the appropriation. It is experiencing a huge increase in the amount of investments that the U.S. is trying to direct to foreign operations. USAID and the state departments are one of the biggest recipients of that budget. So I will advise every company that is navigating or having operations outside of the U.S. to take a look and pay attention to the elements coming out of the House Committee in the House of Representatives, because it's going to be a really good gauge on what are the different missions and objectives from the new administration. Then the tax exemption applies only to contracts or subcontracts that are for more than $500. It does not apply to the acquisition of services. It's a key component of this exemption. Generally is implemented through letters of offer and acceptance, other country-to-country agreements, or federal interagency agreements. It requires reporting of non-compliance for effective implementation, which means that companies and government officials should be reporting any issues or reporting any taxes assessed or imposed by foreign governments and elevating that within the Department of Defense to make sure that this policy is effective. Next slide. All right, resolving tax problems. when encountering issues with the taxes paid or claimed by foreign governments, the company should contact the administrative contracting officer, which will then in return will need to contact or elevate the issue within their agency or department. For military departments, the ACOs of the company should contact the members of the DFARS tax committee, which are the designated legal counsels for tax matters within the respective department agencies. This includes the Defense Logistics Agency, DLA, and the Defense Contract Management Agency, DCAA. For fuel excise taxes, including its applicability, exemptions, and refunds, the ACOs, administrative contracting officers, or companies should refer to the DLA Energy website for issues with federal, state, and local excise taxes, and then or contact the Internal Revenue Service, publications 510 and 378, to access guidance about federal excise taxes. Really key thing here is that every single agency within the Department of Defense needs to have a designated officer that deals with foreign taxes and the federal foreign tax program, and that your ACOs should be the primary target whenever you encounter issues when somebody is imposing a tax that is exempt because it was included in a treaty with that specific foreign country. Next slide. So when the ACO may direct a contractor or a company to litigate the applicability of a tax if the contract is either a cost reimbursement type contract or a fixed price type of contract with a tax escalation clause, such as the one defined by FAR 52229. In essence, that's when the original price of the contract or the firm fixed price contract did not include any tax burdens that are applicable from doing business in a foreign country. Whenever this clause is applicable, then your company might be requested by the ACO to challenge the imposition of that tax by the foreign country. Always try to be in communication with your ACO and wait for their guidance whenever you feel that a tax should not be paid by your company because it is mentioned or is exempt by a treaty with that foreign concern. And whenever it happens, the direction is coordinated with the DoD Tax Policy and Advisory Group through the agency designated counsel. So a company needs to, again, be in constant communications with the ACO, and the ACO should put you guys in communications with the Tax Policy and Advisory Group to basically design the strategy to tackle that imposition of a foreign tax. Other international treaties may exempt the U.S. from the payment of specific taxes. For that, we're saying that you should refer to the list of treaties that is published by the U.S. Department of State, or you should look into the DoD Directives 510064 titled DoD Foreign Tax Relief Program. In that policy, you're going to see that it outlines the different roles and responsibilities set by the Secretary of Defense as to who within the department is responsible to monitor the tax relief programs by country and provide guidance to the community whenever there's issues that need to be escalated or resolved because of a tax imposition by a foreign country. The DoD policy is publicly in their website, and I suggest everyone to read it because it provides a key policy that the DoD wants to put in place. For the most part, the DoD wants to make sure that companies are aware that there are treaties that in place with foreign companies, and that as a custodian of the government funds, companies should be aware that you should look for any tax relief that you can in order to avoid the excessive use of funds provided by the federal government. Next slide. All right. So how do we report for forex transaction on U.S. assistance programs? The contract subject to DFARS 252, 229, 711. When companies are imposed a tax that is exempt by a treaty, they should submit the following information to the cognizant office through the ACO. And that information is you need to provide the contractor name, the contract number, the contractor point of contact, and the amount of foreign taxes assessed by each foreign government. In that form, you should make sure that you copy your ACO and that your ACO gives you instructions on whether they want you to litigate any imposition of taxes. For the Army contracts, you should submit the ACO should submit the information to the U.S. Army Security Assistance Command. For Navy contracts, the ACO should submit the information to the Navy International Program Office. For Air Force contracts, the Secretary of the Air Force or International Affairs should be contacted, and any other contracts for any DoD contracts, the ACO should contact the Defense Security Cooperation Agency. Next slide. All right, so moving on to the key contract clauses that companies and ACOs need to be aware of, that they need to be included in any procurement contracts that are subject to DFARS. So to start off, we are going to talk about the DFARS 252-229-7001, which is a tax relief. Companies or the government or ACOs need to include this clause in solicitations when contracts are awarded to foreign concerns or that the performance are going to be mainly procured on foreign countries. You should use the basic clause in solicitations contracts that will be performed in foreign countries other than Germany. Use the alternate one clause that is provided in the DFARS for solicitations or contracts that are going to be performed in Germany. You should also include DFARS 252-229-7002 title custom exemptions whenever you are in solicitations or contracts requiring the import of U.S. manufactured products into Germany. Moving on to DFARS 252-229-7003 title tax exemptions. This clause should be included in solicitations or contracts that are going to be performed in Italy. Also, there's another clause, which is 252-229-7005, the tax exemptions, title tax exemptions as well. This clause needs to be included in solicitation or contracts that are going to be performed in Spain. Next slide. All right, so going through the list of special clauses that companies need to be aware of and ACOs need to be aware of. There's the value-added tax exclusion, which should be incorporated into solicitations and contracts that are going to be performed in the United Kingdom. There are 3 additional clauses that need to be included in agreements with in solicitations and contracts that are going to be performed in the United Kingdom. That is the verification of U.S. receipts of goods, which is DFARS 252-229-7007. The relief from import duty, which is 252-229-7008. And very importantly, the one that deals with the relief from customs duty and value-added tax on fuel, which is 252-2229 and 7009. This clause needs to be incorporated in solicitations that are contracts that have been issued or awarded in the United Kingdom for fuels such as gasoline or diesel and lubricants used in passenger vehicles. I will add a caveat that this includes taxi fuels or used by taxi drivers. And then the last one here is the relief from custom duty on fuel, which is DFARS 252-229-7010, which should be incorporated in solicitations, contracts that require the use of fuels and lubricants in taxis or vehicles other than passenger vehicles in the United Kingdom. That's the key difference between 710 and 7009. That it applies, 710 applies to vehicles that are not operated by passengers in the United Kingdom. Next slide. All right, so I wanted to add this clause even though that is not referenced or part of DFARS 229, but it's really one of the mandatory clauses that should be included in most of your contracts or solicitations that are going to be performed, which the commodities are going to be procured on foreign soil. To start off, commodities acquired under this contract should be exempt from all value-added taxes and customs duties imposed by the recipient country. This section is in addition to any other tax exemption provided through that separate agreements or other means. The contract should inform the foreign government of the tax exemption as documented in the letter of offer and acceptance, country-to-country agreement, or interagency agreement. If the government or entity nevertheless imposes taxes, then the company should notify the contracting officer, as I mentioned before, and should provide a documentation showing the foreign government assessment of the tax imposition of the commodities being shipped to that country. The contract should insert the insertion of this clause, including paragraph E, in all subcontracts for commodities that exceed $500. So if you are a company that is shipping goods to foreign governments, you should be aware of this DFARS clause and that it should be included in most of your contracts. And also take a look at the treaties list within the Department of Defense website and the U.S. Treasury Department website that help a lot to navigate those intricacies to identify any taxes that should be exempt from payment. Next slide. Then we wanted to give you some useful links because this is a subject that there's not a lot of guidance in the community. So like I said many times in the presentation, you should go into the Department of Defense websites, which provides a list of treaties and international agreements that are effective. There are over hundreds of treaties out there, and it's really hard to identify which are applicable to the country that you're operating with. But so please reach out to this website, which provides a lot of good information for companies. Also, you should go to the DLA Energy website, which provides information on federal, state, and local excise taxes. The Internal Revenue Service publications that I mentioned before should be referenced by companies to gain guidance. You can also go to the IRS website, which provides a lot of information about foreign tax treaties. And then the Department of the Treasury provides information about the U.S. tax policy, including foreign affairs, and it's a really nice set of information to determine whether you should be aware of any tax treaty or what is the outlook of the policy that's going to be implemented by the new administration. So it's going to help you to navigate or forecast the amount of taxes that you need to be aware of that may be negotiated with the U.S. government or needs to be worked with your ACO to be exempt from that payment. Lastly, the Office of International Tax Counsel, which is an office from the U.S. Treasury Department, provides information about policy, legislation, regulations, revenue ruling, and procedures dealing with all aspects of the international income tax law. There's a lot of FAQ documents that are in that website that you can read and go over to answer any questions that might arise during your contracts. Next slide. All right, so folks, that's all we wanted to go through today. There's a lot of information out there, but like I said, please visit those useful links which provide the pertinent information that companies need to be aware of whenever They are contracting in foreign countries. Again, this is my POC information. Please don't hesitate to contact me, send me an email, or call me at this number so that we can answer any questions that may arise when you're dealing with foreign countries.
Thank you, Alejandro, for a great presentation, for sharing your time with us today. And to all the attendees, definitely reach out with the contact information on your screen right now if you do have any questions. And thank you to everyone who joined us for this webinar. The recording will be on our website and YouTube channel within the next 24 hours. And please join us next week as we cover more parts of the DFARS. Have a good one, everyone.